Money on my mind, gotta hustle and grind. Financial literacy always on my mind. I'm stacking knowledge, no time to waste. Gotta invest smart, gotta keep up the pace. I'm reading books, learning all the tricks, studying the market, making calculated picks.
What's good, everybody? It's your boy Reckless Ray Dinero, and we are back at it again with another episode of portfolio updates. This one being for the month of June 2025. It's been a good month. As you've already seen, if you're tapped in with the channel and are watching, this is obviously the first full week of the month, so we are hitting you every day with gems, knowledge, and updates. Per the financial update, we already know that our net worth is down a little bit. Income down a little bit, but this is the normal range. I can't save 84% of my income every month, which if I could, that would be awesome, but we're just not there yet. Dividends, a little bit down. Stuff's just a little bit off from last month. We ended the month kind of on an upswing, though, so those numbers should and will likely be a little bit different for the month of July, so I'm kind of excited about the month of July now. Got a lot of good stuff going on. But before we get into it, let's make sure we hit that like button on the way in. If you've been here more than twice or are liking what you're hearing so far and are going to tap in regularly, go ahead and hit that subscribe button. Also touching that bell notification to turn all on. I promise not to flood your feed. And for those of you who are already a part of the Wolfpack, my Wolfpackians, I do have one ask of you, and that's that you share the video into your networks because more people need to hear about these experiences. Now, before we jump in, not financial advice. This is just a guy on the internet doing what he does with his money and reporting back on how it goes. A couple of the things that are kind of important to talk about here real quick before we jump in is, first and foremost, nobody's this transparent. Nobody's giving you the information like this. Everybody's scared to show their brokerage accounts, their portfolios, what have you. A lot of people are showing you from a perspective where it's a spreadsheet where the numbers can be fudged. You know, whatever. It's important to do your own research. The other thing that I'd like to say, at least in that needs to be said, is personal finance is an N of one experience. So while high yield dividends are working for me, it might not work for you. While Bitcoin is working for me, it might not work for you. Granted, I would say that slathering Bitcoin across everything, in my personal opinion, is kind of the closest thing to a one-shot fits all scenario, because math is math. It's the best performing asset on the planet. So nothing you're doing is outperforming Bitcoin. That is the hurdle rate for those of us who are initiated, for those of us who understand. So, yeah. And also there's tools for the job. Like, I know a lot of people love high yield dividends. I'm one of them. But I understand that that's solving one problem, my income problem. That problem being, I don't want to have to, keyword have to, go to work to get W-2 income, be in the highest tax bracket, to, you know, live in air conditioning. I like air conditioning. I want to live in it. So we're solving for that problem. That does not mean that I would have a portfolio or have my assets all be high yield dividend, because you're still getting dollars which are being debased. So no matter how many of them you get, the fact that it's being debased, the fact that it goes down in buying power every year, if you're holding on to them, you're losing. We're not doing that over here. We're putting dollars to work regularly. With some of my other portfolios, it's like they have tools, they have a use case, and I'm actually gonna break that down today as we're going through them. So let's go ahead and jump on in. We're starting off with our in-home banking portfolio. What does this portfolio house? First and foremost, we got our Strike. We got 2 shares of Strike. We started shifting the way that we do the extra payments on our house. You know, I got a tip when I first bought my house. They were like, hey, whenever you get a little bit extra money, throw it at your mortgage. Pay down that principal. Save yourself some interest. Well, saving 3% compounded is not as beneficial as 8% compounded, I'll walk with that arbitrage. So what we're doing now is the little bit of extra money that we were able to throw, and as we're growing out the extra money that we're able to throw, because that is part of the goals, we are putting it into Strike. So I'm buying a couple of shares of Strike a month, namely out of my dividends, because that's where all my maintenance stuff comes from, and I've tapped in an extra amount to go towards the mortgage into that fund of that pool of money. Now, the Strike position, the reason we're doing that is it's 8%. Obviously, we're getting access to the upside with not as much downside. The average buy price around here should be $100. We're currently sitting at $120. I will dollar cost average this. It's a monthly buy, no matter what. That's just where that goes. And then I have 50 that goes towards the mortgage payment because it went up a little bit this month. We had about a $50 to $60 increase. The house is worth more. It's what it is. Taxes, it happens. At least it's not 50 something bucks a year. I mean, if it was, that means the house would be going up at a good clip every year. And, you know, like I'm kind of ready for it to go back to normal housing rates, but we'll see. The in-home banking position is IMST. What is in-home banking? It's one of those tools that we use, one of our strategies, where you have a pool of money that you kind of use like a credit card, but instead of giving the interest to the credit card company, I borrow and pay back myself. We've got about $600 more going back into this position. Once we get this into position, I will probably not be as privy to sell off said position, which obviously I know kind of defeats the purpose of the in-home banking. But what we're going to do a couple of creative things. So what we might do is once we get to 100 shares of IMST, be able to do some like covered calls for additional income. Also, we'll be deploying this to help pay down the debt. So like we'll have a little trickle of money that's coming out that'll be specifically to pay down the debt that we will be borrowing against, obviously, to then pay that back with a little bit of interest. It's just we'll be borrowing at a smaller clip, which is cool. You know, that's fine. But we have two positions that are in this portfolio right now, and one is for maintenance on the house / early payoff, which we'll probably be looking more at the maintenance versus the early payoff, because what I would like to see is eventually we get this to the point to where we could pay the house off, and then we use the dividend from Strike to actually just manage the mortgage for the year. And we'll do quarterly payments, big quarterly payments that pay out far enough to be able to manage those, or get ourselves an extra payment out of this in some form or fashion would be nice as well. That's what we're looking at doing with the Strike position. I'm not necessarily going, hey, we're going to pay off the house. I mean, if we get to a point to where we need to, that'll be a nice option. The house mortgage will be backed by another asset that can maintain it. And yeah, so that's what we've got going there. We're going to move on to the next one, which is long-term holdings. We got some updates there. Noticeably smaller than what it previously was. We are at $1,716.84. Positions that we have left, we have CCM, which is Columbus Circle Cap. That's Anthony Popliano's SPAC that he's doing. I've been a long-time follower of Popliano. He's afforded me a lot of value. The ability to be able to invest in something that he's putting out into the market is awesome. And you know, we're gonna grab 100 shares, probably a few hundred shares of that. That's part of the goal. We also have our Metaplanet position, MTPLF, International Micro Hyperactive Supercharged MicroStrategy of Japan. We've got 100 shares of that. I'm considering getting 100 more shares. We'll see. So I'm trying to look at what price we bought at, but we're up on that position. So like I try to wait until we're no longer up on the position to buy into them. So What did we sell off? We did have a sell off of CEP. It's not anything against Jack Mahler. It's not that I don't believe in that SPAC either. And it's not that I'm not going to be getting back into that position. The reality of the situation is I was close to hitting my goal in my income portfolio. And that's the prioritized portfolio because it funds all the other portfolios. So getting into a space to where I can pay off this $28,000 in debt, be able to then ramp up my investments and continue replacing my income. So that way I don't have to go in for W-2 work are big priorities to me. So I'm willing to clip a little bit out of this portfolio. Honestly, I would have been willing to liquidate this entire portfolio to get to that 2,000 shares because that's a pivot point for me for getting myself into a position to where I can not have to go to work or choose work that I want to do. I mean, I would be able to take a few months off when I'm ready and do what I want to do and not have to worry about timing or if I'm going to lose my job if I go on this vacation or if I'm going to do whatever. Yeah, I just don't want to. I don't want to be forced to do anything. So what we're doing is we sold off the CEP position. It was sold off as a tax loss harvest. We were down 28% on that position. And we also are going to be buying back in because prices are still low. Prices are still suppressed. These SPACs haven't completed. And I do want to get in on them before they convert. So we're looking at getting our 100 shares of CEP back. We also want to have at least 100 shares of Columbus Capital SPAC acquired before that goes through as well. To just be sitting on them, like I want to have 100 shares in these, and then we'll get back to buying our MicroStrategy stock. I owe myself 10 shares because we've used that also, and yeah, we're making the moves, making the adjustments, trying to get out of the rat race, and you've got to be able to adjust and pivot your plan to accomplish the goal that you have set out. And our current goal is to replace our W-2 income. So like that's the priority. As we're getting closer to that, as we're getting on the other side of this, we're going to be doing an update on Thursday to my MicroStrategy plan and how we're going to be approaching the dividends out of the income portfolio moving forward. I'm excited about it because like now we're into the next phase. We've got the official phase 1 is complete in that portfolio, which was get to 2,000 shares of Misty, which covers most of our core expenses. I've got to do an update on my core expenses now that my mortgage has gone up. And, I'm going to have my core expenses, which are the repeated monthly expenses that we have, ballpark. And then our goal is going to be at least 2.5 to 4x that. And that's to keep the lights on, food, gas, internet, all of the things that we need to subsist and not live outside. The next thing that the other part that I'm hashing out is the lifestyle. That's like going out, doing stuff, the fun things, the travel, the, presents and gifts for friends, like taking care of your people, whatever. That's going to be separate. And we're running that out of our Robinhood portfolio. So we're looking at the income being generated out of that portfolio specific at that point. And our core income portfolio is going to fund the core essentials, and then moving forward, actually we'll get to a point to where we can actually start putting money in the Robinhood portfolio from the income portfolio, since that one is a more established portfolio. But in our long-term holdings, I am happy with the positions that we have here. I still want to get a dividend ETF in here. We'll probably be re-adding LFGY because I've still got like some LFGY dust in here, to kind of start building up a little bit of income in here so that hopefully this portfolio at a certain point could, pay for itself. Like that'd be kind of nice. And yeah, that's what we've got for this portfolio. So here comes the big daddy, the one that everybody stops in for. the income portfolio. So, as stated, we have hit our goal of getting to 2,000 shares of Misty. We'll see what that produces. As you can see, it sits here, and people will be like, "Oh, well, you're down $10,000." Well, total, I am not, but I like to give the bear and proof first before we go over to the snowball analytics, so that way you guys can confirm that I actually hold these shares. We show it every month. We show the growth. One of the things I'm really proud of, though, is this number is at 40,000, which is dope. Like, we are finally at $40,000 in this portfolio. There's a little bit of dust. I've been trying to catch up in my cash reserves because I want to keep a 10% cash reserve in my portfolios, and we are using Strife for the cash reserve over here. We've got 9 shares of Strife. I owe myself, because like this should be at about 4,000. Well, it should be at about 4,000, considering we have a portfolio value currently of 40,000. But I just instituted this. I got it from Wall Street Trapper. He was the one who kind of made it hit home, where it was like, hey, you should have a cash reserve in here for emergencies, big dips, big buying opportunities. And I don't want to just have cash sitting in my portfolio. I also don't want to have it sitting in S&P 500 ETFs. Those just don't work for me either. I would rather have it in the MicroStrategy Strife. I get my 10% paid quarterly, get some money out of it. And that way, as if there's an opportunity, I can deploy capital towards that opportunity. We do have a few shares of iMist. That is not going to be the next position. The next position that we're doing is going to be HOOY, which is based on Robinhood. Why am I going that route when I was considering going the Plady route? I'm a Robinhood holder because we buy a share a month over there of Robinhood stock. So I see the volatility on it. I see how it moves. I've seen the performance, and I have benefited from said performance. We're also going to add Hui as probably our monthly over in the Robinhood portfolio as well. I want to have one monthly in there, but it's going to be a slow buy. I'm going to probably buy a share of Hood and a share of Hui, and have those be my monthly buys as supporting the Robinhood platform while also getting income off the Robinhood platform. The reason being is this is in the group that is 2 weeks off from Misty, and I'm replicating my paycheck, which is what we're doing. So I'll probably do in this portfolio, I'll probably do a split of Hui and Plady. I'll probably do both, and I'm probably going to do a 50-50 split. So that would put us at a goal of 2,000 shares. I think my second position, since those are heftier payers, there's a little bit more IV to be had in there. Probably do like 250 and 250 for starters and see where that sets us out. I'm going to have to go back and do some more research when I'm strategizing these plays. I look towards having a specific allocation. So like for Misty, I'm like, I want to get a minimum of $2,000 a month. So for the second position, we'll still be looking at that $2,000 a month from that position, which would put me at $4,000 a month total, which for this portfolio, which is reinvestment and core expenses, is going to be the focus of this portfolio. That should put me well above what my core expenses are now. That should put me in that 2.5 to 4x range. I've got to re-up the numbers, but I'm pretty sure that would be, if I was at $4,000 a month for my mortgage and regular expenses, that's going to be around the ballpark. If I need to, I will fill in another position, and so we'll have 3 large pairs. I don't know that I want to put a weekly in here necessarily. Yeah, I'm probably not going to put a weekly in this portfolio. I'm just going to do monthlies. But yeah, that's kind of the logic behind it, is to like have that, and it's like cool. Then I can worry about the lifestyle stuff, and I can also take a chunk of the money out of this once everything's cleared, because right now we're just clearing debt. The Robinhood portfolio is building itself up. We do the updates on that every Friday. Is building itself up to cover lifestyle. Once we start swiping that card, I'll be able to pay it off that card. But one of the other things that we have in this portfolio is we're about to be done with margin. Like, we're done with margin in this portfolio, more or less. Like, I might give myself like a little early pay on my if like once the EX date is in, I'm going to go back to giving myself a little heads up margin on that if I want to get a little additional income. But outside of that, this month is the last month that we should be carrying a margin. Like, I've already pulled my maintenance for this month. We get paid. Well, I'm recording this Sunday, July 6th. We get paid Monday, July 7th, because of the holiday. When that comes in, I should be done with margin. Like, no, I should be carrying like $300 in margin into August. And once that first August payment comes, because we get paid twice in August on Misty, that first August payment is the first one where we're focusing on debt. Clearing the last few $100s of margin will be that. Actually, no, because I got my paychecks. So next paycheck, when we get paid on the 18th, that should be it should just be a couple, like maybe $150 in margin that's left. So I'll be short a little bit of money. We're gonna have our minimums get pulled out, and we're gonna, like I said, Thursday we'll have the update on what the new dividend strategy is moving forward now that we've hit our 2,000 share marker. But we'll be pulling our minimums in the opposite direction, because right now we've been pulling minimums to maintain the debt. So it's our bare minimums on everything that we have in our 0% positions. And moving forward, we're going to have minimums for investing. So the investing numbers are actually going to take the hit while we're attacking this debt. But on the flip side, they say clearing your debt is securing a gain for whatever that interest rate is. Well, we just want it out of the way, because moving forward, before we get into this very inflationary environment, I want to be able to deploy capital directly towards strategic asset acquisition. And I don't want to have to worry about managing or maintaining debt unless it's asset-backed debt that's getting paid off in a schedule. Also, I'm ready to tap into that HELOC. I've got a lot of equity in this property. Once my debt is cleared, those credit scores go back up. You get preferential rates and treatment. Also, I'll be able to deploy off my credit cards again, and I'm ready to, get those things cleared. So that's where we're sitting at here. We've got a few shares of IMST that is in here. I am not going to put that in this portfolio. Most likely, what is likely going to happen is I'm going to shoot those shares over to my in-home banking portfolio and just take that as another payoff number, because I'm not going to use that in this portfolio, and I really don't want to sell off those shares when I could just use them somewhere else within the financial structure. But we're going to be keeping an eye on that. We'll take a look, because I might just move all my dust over to the other portfolios, so that way this is clean. But yeah, so now we can jump over into Snowball Analytics and see what the numbers look like over there. So getting over into Snowball Analytics, we are looking at check my holdings numbers real quick. So yeah, we're a little bit off on this because this isn't 100%. Oh, there we go. That's a better number. So what are we looking at here? We got total profit $16,103.42. So I'm up 39% in total profit. Total profit includes the dividends that are paid out because that is profit technically. We've basically got two funds that are 90% or more of the deal. Looking out, next 12 months, we are in the 30K range. Obviously, this changes every time we get a dividend payout. It adjusts the average, but we are at 47% of our goal. And this has us slated at 2029, but that doesn't make sense. We'll see what August shows because this is like, I'm gonna have to go check and see what I've got set up on the metrics on that because they did an update where you can change the metrics on your goals. Well, actually, let's just see what they've got going on here. So your goal could be achieved in 40 years. So at the current rate, because I don't have reinvest dividends turned on, because it doesn't give you the ability to reinvest a specific amount of dividends. So that's fine. That is fine. But we are on a good trajectory because it's showing over the next 12 months. We'll be at 30,675.35 based on the previous ones that have given dividend growth. We're looking at last May in 2024 we had $328. This May we had $3,392. Last June we had $719.10, and this June we had $2,530.12. So July, so this is interesting. So this is one of the things that I like. So like you can see how these like shoot up and then down and then up and then down. So in May when I started, we had an upshot. We had the downshot in July and then an upshot in August. So my question is, like this cycle, it's like we started ramping up in August and then, up through December. December was the next pullback. So I'm kind of excited about this based on the cycle to see if this cycle with more money matches. Because if it does, this number is going to dramatically change. Like if we have a good July, like we have a good pop-up July, and then a pop-up August, and then a pop-up September, and then a pop-up October, and then a little pullback in November, and then we go back up in December, that could be interesting. Let's take a look at the individual positions. I like to show you guys that. Let's go to the holdings. So the only two that matter are Misty, Strife, and IMST in this portfolio. So IMST total return, we're actually not doing too bad. Misty total return, total profit, we're at 23%, which is not bad at all. Hopefully we get a little bit of forward momentum on MicroStrategy. They got added to the Russell 2000. Awesome. And they qualified for the S&P 500. So there should be I'm seeing where we could definitely see some upward side on MSTR. Long-term, I'm very bullish. Long-term Misty, also very bullish. Long-term IMST, also very bullish. Like it's MicroStrategy, bullish. Our Strife position, we're up 13% on our cash holdings. That's just the cash holdings position. Now the numbers in Snowball Analytics don't get updated till the end of the month, and we did buys at the end of the month that were not in the that were not confirmed on the transaction ledger. So when we update next month's numbers, we'll have that remaining 103 shares that go on there, and then 2 more shares of Strife. But that's what we've got today. Like, I mean, it's it's one of those things where I always like to take it with a grain of salt. Like I'm following the process at this point, and like as I'm seeing the results, I get more excited about it. But for me, it's like at this point, I'm like looking at every single thing. I'm like looking at stuff I can sell off in the house because I'm just like want more money going into that second position, to get that income portfolio going even harder than what it is now. I'm really excited about getting this debt paid off so that way we can redeploy more debt to get the second and third positions. However we do that, taken care of and solidified. I'm excited to have this debt cleared off in the sense that it won't be something that I have to manage moving forward, because we had unexpected surgery that added to the pool of debt, emergency deployments of debt that I wouldn't have to get these portfolios started up because I didn't know if I was going to lose my job or not. Just a lot of stuff, and like clearing through that and coming through the other side of that is really, for me personally, this has been my financial crucible. I'm currently in the testing grounds of my belief system about money, about finance. For me personally, I'm going through the crucible now and documenting it. So it's just really interesting to see, and like being forced to come look at these numbers every month and then talk about it and talk about the moves that we're making, why we're making these moves, how this plays out moving forward. It's helping solidify what we're doing because the numbers are going in the right direction in the long haul. Like obviously you're going to have some months where your net worth doesn't go up as much. We're down $2,543.11 in net worth this month, but last month we had a boost of $14,459.31. The numbers are going in the right direction. Like, yeah, you can't just have a straight line up, but like even the pullbacks, and that's 3 months prior to, we've had positive, 2 months prior to, we've had positive net worth. Now we did have during the monster crash a pullback of $34,934.83. Like, it's the context of being able to look and know where we're coming from and know where the trajectory is going. Like, yes, this is very volatile. Yes, this is not for everyone. That doesn't mean because of the tools that I'm using, or better yet, the underlying assets that I'm using the tools with, doesn't mean that the tools don't work. You just don't like Bitcoin. You don't like high yield dividends. You don't like MicroStrategy. Those are specific things. The strategy and the tools are all sound. Also, I don't see anybody else tracking their net worth and giving the breakdown the way that I'm breaking it down metrically and showing the growth and showing the progress. Like, these things are happening. And then you have a bunch of people out here that are trying to sell you stuff that are giving conjecture, they're giving opinion, they're armchair quarterbacking, they're giving their thoughts and feelings. And it's like, okay, well, every time you show up with your condescending attitude, all you show is a spreadsheet that you made. All you're showing is snowball analytics, which you can manipulate. I use it. I know how spreadsheet works. I know how snowball analytics works. The reason I show the portfolio in a brokerage is because I'm giving the context of like, hey, this is real. Everyone can conjecture and finagle numbers and live in fantasy all they want. Math is real. Math is tactile. Math does not lie. Growth does not lie. Let's talk metrics. Like, let's be honest about this. There's a bunch of people out here who think that everyone's a charlatan because no one's out here telling the truth. You're not speaking to an actual situation. You're not being a real human. You're just trying to give people a little glimpse of motivation. You're trying to hype them up. You're trying to get a little bit of hopium because you make your money on YouTube. And you know what? I'm not hating the hustle. But what I'm saying is, if you want to go back and forth, like, let's go back and forth on numbers. Let's talk ideas. Let's talk math. Where's your proof? Where is your receipts? Where's the context for it? Because I've got mine. And I'm sharing mine. Every month we do these updates. And I like doing them because it helps me identify and punch holes in my ideology, fine-tune my ideology. But I also don't prescribe this as the be-all, end-all beyond Bitcoin. And that's going to be for our lifetime. Like, that's just what it is. You can argue math all you want. And yeah, I mean, it's going to be what it's going to be. Like, Bitcoin is the best performing asset. Like, you should buy a little bit just in case it catches on. I mean, it's already caught on, but it is not too late. We've got about another 8-9 years to really get yourself solidified in the ecosystem. Then you're just going to be fighting over the scraps that are left, and you're going to have to use it anyways. You're going to be using things that are backed or denominated by Bitcoin. Probably not denominated, but definitely backed. Fiat currency, I don't believe, is going away. I don't believe that we should be paying for things in Bitcoin necessarily, unless you really, 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 really care about somebody, because you're giving them generational wealth at that point. I believe it should be the foundation of every financial strategy. It's the foundation of mine. Now, as that strategy unfolds out, you'll have different levels of efficacy and efficiency. Those are the only two things that should be argued about in this space. I don't care how you feel about your investment strategy. I don't care how you feel about what your investments are. I care about the efficiency and the efficacy of the investment in and of itself, of the strategy in and of itself. And if with me, Bitcoin is the hurdle rate. So I value stuff in Bitcoin. I'll go back and back check in Bitcoin terms. If this was valued in Bitcoin, is it up? If this was valued in Bitcoin, am I getting a return that I should be getting? Is this going up in fiat terms more than Bitcoin is? And if you're chasing, and I'm talking over the long term, I'm not talking about, oh, this month this went up more than Bitcoin. Like, nobody cares about that unless you're making those trades those months. And most of you aren't moving in and out of positions like that. It with the efficiency that you claim to have. Otherwise, you would show the brokerage accounts, because you don't, because it would tell a different story. It would tell the truth. So I'm going to leave that there. Make sure you've liked the video. Hit that like button. Hit that subscribe button. Hit that bell notification. Tap in with me, because we're in the midst of a financial revolution, people, and nobody's trying to get rich by themselves. There's always more room in the wolf pack. For my wolf pack people, share the video. We need to make sure that people hear these stories from those of us who are not at the top of a mountain preaching at you. We're talking to you and having a conversation that you're more invited to join down in the comments. So tap in with me. It's been another episode of Portfolio Updates. It's your boy Reckless Ray De Niro. Had another great one. Had a great time doing this. We'll see you next month.
Money on my mind. Yeah, focus, got no time for games. Nah, I don't play, man, I'm all about that financial literacy. Investing in my future, building generational wealth. Dollar bills, they be calling my name, but I ain't chasing fame, I'm chasing change. Learn the game, now I'm playing it smart. Putting my money to work, it's an art. I'm stacking paper, building my own empire. No more living check to check, I'm getting higher. Investing in stocks, real estate, and more. Gotta secure the bag, that's what I came for.